Rob Subbaraman, Head of Global Macro Research at Nomura, joins us live from Singapore. Rob, very good morning to you. What is spooking the world? Is this, and we were speaking about this earlier when we started off the show, is this just an Anthropic Palantir AI threat play that you're seeing across asset classes, or is there more?
I think it's a combination of things. I think one, there was a lot of over positioning in precious metals, in crypto was one. I think secondly, we've had I'd say some concerns around AI, partly the software side, AI going to outcompete some existing software companies, Anthropic pushing that, but then also just overnight Amazon, some concerns about these massive investments that hyperscalers are doing and whether they'll be able to generate the needed returns from them. So I think it's a combination. And then the third thing I would say is just the US data. You mentioned overnight, initial jobless claims, continuing jobless claims, the challenger job cuts, fairly weak ADP as well. So, Powell had warned at the last FOMC about potential cracks in the labor market, and I think those cracks have opened up a bit more as well. So a combination of things, I think, related to AI, financial positioning, but also economy that are contributing to all the growing worries.
Rob, it's difficult to call these days as to how extended can falls be or rises be, but based on the fact that there is a particular level of action that global central banks have taken and now their actions are diverging, wherein we do not have coordinated central banking action, can this fall be steeper before it stabilizes?
I'm not very good at predicting how far markets fall. I think it's very difficult. What I would say is that markets have had a fantastic run. So I think we can't rule out that they could fall further. The thing that worries me is that also there's all the geopolitical issues. I don't think governments around the world are that coordinated at the moment. And also, they don't have that much ammunition because many of them have run up very big budget deficits, a lot of debt now. So I think the policy response is, potentially not as strong or swift as it could be if things get really bad. It could be a bit more challenging. On the bright side, and we can talk more about this, I would say is India. I think India is in a very different position compared to, many other countries that have benefited a lot from the AI. I think in India, the sentiment has been very weak for a long time. But, with these trade deals for EU and the US that are coming through now, and the fact that India is growing very strongly, low inflation, prudent policies, I think that in terms of diversification of global investors, I think India could be a spot that gets more attention going forward.
One would think so, Rob, basis everything you see, but somehow that's not really playing out. Is there a valuation concern at all as far as India goes, or are corporate earnings not really matching up? Where do you think the hesitation is in terms of foreign inflows in India?
Well, I think, in the past, there had been valuation issues. I think they've faded a bit over time as other markets went up. I think India wasn't a big AI play compared to, the US and countries like Korea, Taiwan, Singapore, Japan, China. I think the AI story is coming off a little bit at the moment. But, the trade deals as well, I think the tariffs were a big constraint. And, one thing I'm thinking a lot about is, there had been a lot of foreign direct investment commitments to India. And I think a lot of them had been put on hold last year because of the very high tariffs imposed by the US. And, if that is now coming off, I think we could see a lot of that pent-up FDI starting to come through, which would be very good for India's balance of payments.
Rob, I'm again going to ask you something that you may not have very clued in research on, but just the way crypto markets are coming off, and as much as people thought that that was digital gold in some fashion, I think 2025 and a better part of 2026 is showing that gold and crypto are different beasts altogether. Now, my question is, that is again smacking of a risk off, right? I'm not asking you to predict where these markets will go, but do you reckon that the current mood is a risk off and therefore the chances of a lot of these asset classes going further south are high?
I mean, there've been big corrections in crypto and gold, and not just gold, silver as well. And there had been, a lot of investment by not just institutional, but retail investors as well. So I'm cognizant of the risk that we start to see a bit more fallout. And even, in the US equity market, the headline indices have not fallen that much, but within, and you're looking at particular companies, there's been a lot bigger moves, right? And so if I think about, for instance, private markets, where potentially there's less transparency, less liquidity, more leverage, I do worry that we could see more fallout, maybe even in credit markets as well, right? So, if we get a bit more of a correction in some of these, and there has been big corrections in some single stocks and some of the commodities we talked about, I wouldn't be surprised if we start to see more fallout and potentially some credit events.
Rob, thank you for your time today. I know we squeezed in some predictive questions versus just the macro that you really specialize in. So excuse us for that, but today is just that kind of a day.
Absolutely. Thanks for having me. It was good.
The pleasure was ours. Thank you so much for joining in today.